Welcome to Real Estate 360 with real estate expert Kenn Renner. My name is Sandy McElry. A little different look this month as I'm coming to you from the Black Hills of South Dakota. Kenn is in Austin, Texas. And boy, since you and I visited last, a lot of things have changed.
Oh, absolutely. Last time we did our presentation, our podcast was in May of this year, and that was the peak of the market for the United States and for Austin, Texas. So we're going to go over a lot of details of what's happened in the last couple of months, the roller coaster of interest rates and inflation numbers and fears of recessions and all that stuff. How the conversation has changed so much from just a couple of months ago when things were still screaming and booming around here. We're looking forward to this is some numbers here that we've got here. May was pretty much the peak of our market in Austin, Texas. And I've got some stats here to go over with you from the Austin Board of Realtors. We have still an amazing appreciation rate. We had 550 was the median price in May. Now 537 was the median price in June. So I'm going to go back to May since we missed it. 550 was the price. We have 1.2 months supply of inventory, and that was up from 0.7 months supply back in the previous year. So we're seeing 18% new increase in active listings, and pending listings are down 12%. So we're seeing a shift in the market. Then we look at June for the Austin Round Rock MSA, and we're at 537. Notice the difference. We went from 550 to 537. Sandy, that's the first time we've had a drop in 6 years, month over month. The city of Austin is a little more concerning here. Is that 667 was the rate, the median sales price for June or for May, and in June we were at 615, and that's a $50,000 drop from the previous month. It's not something to be panicking about. It's just something that this is a correction from an overheated, overappreciated market. It's starting to bring it back down into some level of normalcy. And so we're at now 1.8 months supply of homes in almost 2 months, which we hadn't seen that since the pandemic started as far as supply of homes. The dollar volume's down by 16%. So we're looking at definitely a shifting market, which requires shifting strategies when you're looking to invest or when you're looking to, maybe take your chips off the table. Still, we have a very strong market. Central Texas market is really strong. The major metros, every one of them, you can see on the chart, every one of them is up and continuing to go up. We're going to see a leveling off, especially now we're seeing Austin dip a little bit. But what we're seeing too is great opportunities in the submarkets that we've talked about. You can see the little green line at the bottom of there is the San Antonio market. And you can see their median price is just over 300,000. Ours is at 615,000. So to drive 45 minutes south, you can save yourself $200,000 or $300,000 in sales price. So we're going to see the San Antonio, New Braunfels, that whole area we've been working quite a bit for the last couple of years. We're going to see that really take off. We're also seeing the rents up there being super strong. So I'm going to give a quick market update since we've talked last. So first of all, the builders went from not wanting to sell to investors at all, or very selected areas, as we talked for years, right, for a couple of years, to now they're much more humble. They're actually in a pickle because what happened was back in the end of the last quarter of 2021, you were seeing that the builders were ramping up for the summer sale. So they were putting out a lot of inventory. The problem is there was a shortage of permits, couldn't get lots, couldn't get supplies. So they were ramping up in that third and fourth quarter of 2021 for the summer selling season. Well, here we are in the summer selling season. We have a huge amount of inventory that's hitting the ground. And guess what? The interest rates went up doubled since May, and that basically means that if you could afford a $500,000 house, now you can afford a $400,000 house. So it's really sucked a lot of the buyers out of the market. Now the builders are left with these inventory, with these homes on their hands. So we're seeing that. Plus, their costs are still going up. Inflation's here, right? So their costs are going up. Now the market's shifting, and so their margins are getting smaller. So there's going to be a shakeup. And the next 6 to 12 months is going to be a great opportunity to pick up some great deals from the builders as they wholesale out these properties, because they can't just hold them in their inventory. Now, it's going to change a few things too. they're going to slow building activity so that they can get rid of their previous this inventory, the shadow inventory that we see. And that's going to affect our future inventory. We're still 3.8 million homes short in the United States for homes right now that need to be built. We're going to see a return to creative financing. We're going to see a return to the stuff that I cut my teeth on. I got my license in 1983. At the peak, interest rates were at 18% for 30-year fixed, and it was, I think, 11% adjustable rate mortgage was the start rate. So I've been through these seasons and these times, and there's great opportunities for different types of mortgage products to help offset this recent increase. The rental market is winning. And that's what's great. So what's going to happen in a deflationary, property values are starting to edge down a little bit. Buyers stay on the sidelines, right? I'm going to wait and see. We're hearing that everyone. I'm just going to wait and see what happens with the economy. So that creates less buyers after already pulling out less buyers because of the interest rates. So they're going to stay on the sidelines. And guess what? If they're staying on the sidelines, they have to rent. So Austin, in the next chart, you see Austin and San Antonio are in the top 10 of the fastest rising rents in the nation year over year. So, Austin was number 3 at 32% price increase for rents last year. I mean, talk about inflationary, right? And San Antonio down there is 23%. That's nothing to shake your hands at. So before I get any further, I want to let you know that I have a much longer version of this because I really need to grab all the stats. And we're going to put it out as austininvestmentwebinar.com. So Sandy, put that on the screen, austininvestmentwebinar.com. And what that is I'm only doing 12 slides. I go deep into the potentials of what's going on, what the future is going to be. So take this information, get Austin Investment Webinar. It's more like 50 minutes of deep information going macro to micro. The rents, though, are like I said, they're going up all across the metros, and they're going to continue to go up. So it's a great time to be a landlord. And so, but if you look at the chart, you're looking at $1,500, $1,600 is about the rent for a San Antonio house. That same house in Austin's $2,500. So we're seeing people moving to flight to affordability. We're also seeing a lot of expats. We talked about that in previous time. People were taking their $500,000 or $700,000 windfall in their home here, and they're going down into Braunfels and buying a mansion, right, for a lot less. So really, affordable housing is an amazing place to shelter yourself from inflation. And Austin is still a great place, and there's going to be some deep discounts. But I see our submarkets, which are not dropping and not have as much inventory, are going to be better opportunities moving forward here. And I also love the return of first-time homebuyers. That's amazing where they actually have a chance now. And so that I cut my teeth on helping first-time home buyers through the 90s be able to clear up their credit and get homes. But that was what led me to these investment properties, because it's the same product for affordable housing. I can't see anybody going wrong with investing in affordable housing in one of the best states in the nation. So I'm going to go into the real estate recessions. Now, this is another conversation we have. People think, oh my gosh, the sky is falling, and Chicken Little thing is all over the media right now. And the reality is, are you a short-term investor or a long-term investor? And so if you're buying and selling, if you're a day trader in real estate, it's not going to work. So this is a long-term investment. But one thing is my friend who's Richard Advani, who's one of the top mortgage guys in the United States, pointed out was this slide that he got from Case-Shiller house pricing index, that through the last nine recessions, only one recession, real estate didn't do well, and that was during the mortgage crisis, and it was caused by real estate. This new anything in the past, all the way back to the 60s, was not caused by real estate. It was caused by other external factors. And same thing in the very short recession when the pandemic hit, we had real estate did obviously amazing. So we're not in the same boat as we were in 2008, because everybody has equity and everybody had to qualify to get their darn mortgages. What a concept that is. Also, want to point out too, with the adjustable rate products coming out to help us with lower payments or 2-1 buy downs or interest only programs, it's only for a short period of time, because on the chart you see next, you're going to see interest rates and recessions. You can see the rates don't stay high for very long. They peak and then they drop. They peak and then they drop. So if you're trying to buy a primary residence or an investment property now, or a luxury property, whatever it may be, don't worry about the interest rates too long, because I refinanced my last house 6 times. I mean, as the rates went down, I just refinanced along. Now, of course, if I had an adjustable rate mortgage, I wouldn't have had to refinance at all. But that's for another presentation. Okay, the other thing was we're talking about on the Austin investment webinar is other alternatives. Where would you invest your money? Cash? No. If we're at 10% of 10% of inflation, that means your value of your cash is going down 10% every year. So if you have $100,000 now in cash in the bank, it'll be worth 90 next year. That's not a very good investment. Well, stock market. I'll show you the stock chart. We'd go into detail on the stock chart. I mean, I know people have done really well with the stocks, and I'm not complaining anything about the stock market. You can see as long-term investing, whether it's in real estate or stocks, is going to do really well. It's just you don't want to get caught in the dips. And we saw when the pandemic hit, and you can see it on the chart, it dropped like 40% overnight. Real estate doesn't do that. So we have a little more stability in our market. So next, we're going to look at going back to the Central Texas market, looking that you can buy twice as much home in San Antonio, or 2 for 1. And that's what we're seeing some of our people doing. They're selling property here, doing a 1031 exchange and buying 2 down there. And we have our other submarkets that we work as well. And so I go into detail on that in the austininvestmentwebinar.com. All right. So last but not least, I want to keep it short because Sandy's time is valuable. So anyways, it's when opportunities are coming soon, builder inventory. And that's stacking up right now. They're calling us. They're because we have a great relationship with the builders. And the investors are liquidating. So I have people that bought a house from me 20 years ago. It's tripled in value. Now they're taking their chips off the table. So they're willing to drop their price because they couldn't believe they got this much for it anyways. They're thrilled. The expats move into affordability. People just taking their cash and buying another primary residence. I'd love to help them with that, or keeping that current residence as a rental and go and buying something else. 1031 exchanges, amazing opportunities right now. And then wholesale cash purchases. And we're going to get into that in another podcast or another. I'm going to do much more of these webinars because there's so much new products coming out. One of the ones I'm really excited was I met with the director of homeward.com, and they are a company that allows any buyer to use their cash to purchase houses. So and any of our buyers can become cash buyer purchases. And so that's where we're going to use those kinds of those new products to be able to go to the builders and say, okay, we'll pay cash, right? And they're going, great, here, take it, and then turn around and finance it. And then we're looking at potential bulk purchases from builders because they've got all this inventory, and then bulk purchase at wholesale. And then we'll talk later on about syndications. So all in all, Sandy, the market has definitely shifted. The good news is there's opportunity in all shifting markets. And the opportunity really has to do with aligning yourself with the right people, the right team to handle this, because you got some different navigation as we're going into purchase. The whole attitude is changing. A lot of these sellers don't even know what, I mean, they hear a little bit about it, but they don't know the reality of what I just showed you, that the Austin area has dropped $50,000 in 1 month. Now, will that continue? Probably not. And if we go through the charts in the Austin Investment Webinar, you'll see that we're just going to normalcy. So the $500,000 house I had in Terra Vista that now is worth $540,000, I don't think it's going to drop below $420,000 or $400,000. It's on the golf course. The national median price is $400,000. So I don't see Austin, Texas Round Rock property dropping below the median in the United States. So there will be an adjustment down. Luxury is taking a little bit more of a hit. For the luxury market is 4 months right now, average time. So on the market. So my suggestion is be aware, be willing to, if you need to sell, make sure that you don't stair step down the market. If you don't need to sell, hold on to it. Become a buy and hold strategist. That always works well. But if you have to, I can help you with the sale of the property, the fix up. We have a management company, so we've got all the vendors to help fix up your properties, and then know the expert laws for 1031 tax deferred exchanges and or the primary exemption for your primary residence. So once again, the shift in times are changing. It's going to be a great time to be a buyer. It is a great time to be a buyer, great time to be an investor. And so I'd love to talk with you and continue the conversation. So this is Kenn. Call Kenn.com, call Kenn.com is my scheduler. And you can just call me, text me directly at my phone number, 512-423-5626. Love to talk with you and get caught up. All right. Thanks, Sandy.